Hey, welcome back, traders. It's John at Ring King Insights. Today's the general market update. It's Saturday, but this update is of yesterday, June 28th. Just a reminder, the presentation is for educational purposes only. Our agenda is to go over those indices, look at the breadth again, and then we're going to check back in on rotation to see if we're seeing any early signs or clues of things coming down the road. And then we'll wrap up. Okay, the indices and breadth. Quick look at the S&P 500 here on a daily chart. This week was a fairly benign week. Not a lot going on. There was the PCE on Friday, which rallied kind of early in the morning when it was a pretty favorable report, but then things stalled out in reverse for the rest of the day. So we've talked about the breadth on this uptrend being very, very questionable. We had a couple of stalling days here, so we're starting to see a little bit of distribution in the S&P, but probably most important is the net new highs, new lows. You can see without having a green background, it's really telling us that there's just no progress. We're not getting net new highs. It's really a choppy environment unless you're in a select few stocks that are working. And trading in a choppy environment like this, a weak environment, can really cut up your account. We want to see these green periods with solid net new highs, and you can see that's when you usually are in an uptrend above the 20 exponential moving average. These little blue dots mean the net new highs were above 50. So turning to the NASDAQ 100, which has been the big index the past month, again, very similar notations. We had some stalling at new highs. Looks like we're going to come in a little bit. On the positive side, we're still above the purple line, which is the 20 exponential. Volume picked up here at the end of the quarter, and you can see net new highs, new lows is still very, very weak on the NASDAQ. We're actually barely got a little bit of net new highs on Friday, but other than that, it's been pretty much a very weak environment as indicated by the shaded red background. So I wanted to go into revisiting what we talked about last week, which was looking at if the market was going to have some rotation or the market could potentially really break down. So this slide is of last week. We talked about NVIDIA, and then most importantly, we talked about what we're going to be looking at to check sectors, ETFs, to see if we're seeing rotation. So let's check in on that and see how things are doing. Okay, so on the left, this is HACK, which is the cybersecurity ETF, and I've divided it by the Qs, the NASDAQ 100. So you can see here, here's what the chart looks like. And when the line is moving up, that means that cybersecurity is outperforming the Qs. And you can see for months prior, cybersecurity was lagging the Qs. So we have seen an upturn. It's starting to outperform. So that's very positive that maybe we're seeing some rotations into some of the cybersecurity names. On the bottom here, this is really a graphic of accumulation distribution. The black line is 1.0. We like to get at least 1.0 on the net accumulation to show us that there's really some buying going on. The blue line is 2.0, which is very strong. So we're coming from a very weak period, but we've just inched above 1.0, which is encouraging, and we're starting to see some outperformance. Now on the right, this is IGV, a software ETF. Same analysis. If the line is going up, that means software is outperforming the Qs in this situation, which we are starting to see outperformance. So it's possible that money is rotating out of the MAG 7, MAG 5, MAG 2, however you want to look at it. And we're starting to see that some money flow back into softwares after a very, very weak period so far in 2024. And the net accumulation distribution line is trying to get into positive territory. So this is very, very early, but we are seeing some signs here. And you might say, well, what should we be looking at? What's going on within the ETFs in terms of specific stocks that you might want to consider for your watch list? So looking at cybersecurity, here's a couple of names that are basing. We want to be looking at stocks that are basing so we get into a nice solid uptrend. We could find stocks breaking out, making really, really strong moves. So here's Palo Alto Networks, which really got hit hard on earnings back in February and is trying to rebuild itself. And you can see it's been basing for a number of months, 4 months. What a good sign is, again, on the accumulation distribution, we can see that we are above 1. We're probably around 1.5 as it comes up the right side of this basing structure. So that's good. And we're starting to see the moving averages here, which is the 10, the 20, and the 50, properly stacked on the right side. So that's probably a name for your watch list. CyberArk on the right side here, again, a daily chart, is also a stock that's been basing for, 4 or 5 months. And you can see the relative strength line is showing some very strong action on the right side of this base. And the stock has really changed some characters, starting to obey its 10 exponential moving average, which is here in the cyan color. And you'll also notice that the accumulation distribution is showing above 2.0. That's really positive. As also evidenced, look at the blue volume spikes above the 50-day moving average. So the character has changed in CyberArk. That's really good. I also noted that CrowdStrike is probably the leader in the group. It pushed out of its base a couple of weeks ago. And on the weekly chart, if you take a look at it, it just formed a 3 weeks tight. So it's broken out 3 weeks tight. That typically could be a place to make a small add. And I will disclose, I still have my CrowdStrike position. Now, turning to the software side of things, looking at potentially for early rotations and some of the basing, here is ServiceNow on the left. Again, long basing structure, really kind of washed out and formed this double bottom with a really a sharp shakeout type of leg on the right side of the W. But you'll notice since then, the stock has gotten stronger. So whoever was the big seller, they're probably out of the way. And you can see blue volume spikes as we come up the right side. We finally have pushed above the 50-day moving average in red. So that's something for your watch list to take a look at. And Datadog. Datadog is another one that was forming a base, and then it was getting support here, as I've shown with this dotted line, and then things really broke down. We had a gap down on earnings. We had kind of a weak, very weak rally with no volume, and we broke hard again. But what's happened, you can see in this line box, is the stock character is starting to change. We had a strong push above the 50-day. You'll notice the relative strength line is pointing at 1 o'clock, which is a big improvement from what it was doing. And you can see the volume is starting to pick up. So I'm not saying that these are buyable right here, but they're definitely names to keep monitoring if we're truly seeing rotation from the semiconductors, maybe into software or cybersecurity. Build a watch list out of those groups and see what looks attractive. Last week, I mentioned we would also want to keep our eyes on 2 other ETFs to see if we're seeing rotations. One was ARK, and you can see ARK. ARK this week pretty much did nothing really superior in terms of outperformance. So it's still a very weak. Now, ARK is kind of considered a growth stock proxy, carries a lot of technology stocks, young biotech stocks, etc. So we're not seeing any outperformance in ARK. It's kind of neutral. And then on the right, we have IWM, which is the Russell 2000 Small Cap Index, which I think everybody's been waiting to get a rally out of this again. But it's been for 2 months, it's been really underperforming. So when we divide that by the Qs, we can see a little teeny bit of upturn. We're still not into accumulation in terms of being below the 1.0 line. So maybe we get a little catch-up rally if money rotates into small caps, but either one of these does not look great to see rotations. So far from what I'm seeing is maybe software, maybe cybersecurity are more encouraging. So let's wrap up. It was pretty much a nothing week, end of the quarter, a little bit of volatility there. But we've had poor breadth for a month. We've had some, we're starting to see a little bit of stalling in distribution days. So we'll have to just keep an eye on it. The good news is both the NASDAQ and the S&P are still above their 20-day moving average. So it's hard to get too bearish with that situation. Net new highs, new lows. This is an important indicator. It's still extremely poor. We showed how, we don't have a trend with net highs, net lows. It's very reflecting that it's a very choppy market, that if you're not in the key select names and you're trying to trade in a very low odds market, you're probably getting chopped up with some stops. So it's No doubt, a defensive place to be right now, defensive posture. Leading stocks, we're seeing a few early signs of maybe some rotation. We want to watch bases being built. We want to build our watch list of potential new leaders so we're ready if things really, really turn. So that's what I'll be doing, trying to identify strong sectors as well as strong stocks building bases. Exposure levels, I see no change from where we were last week. I've been in the kind of the 20 to 30% range with the caveat that the 20 to 30% is not initiating much in the way of new positions, or if you do, keep them very, very light. Really, I think the 20 to 30% is holding stocks that you have cushion and cushion of at least 30% plus so you can withstand some of the chop and just really be patient. It's okay to just sit on the sidelines and watch. We're probably going into the summer doldrums, which are choppy. Just as perspective, July tends to be a positive month for the market. So we may get a little bit of rally in July. We want to look at the breadth to see if it's really, really a solid rally. And then August tends to be a very, very indecisive month. A lot of traders are away in August, and it's really, really hard to get a read in August what's going on. So stay engaged. We want to build our watch list. We want to stay engaged with the market, even though we're not doing a lot of trading at this time. So the quote of the week is from Vince Lombardi, the legendary coach of the Green Bay Packers. And his quote is, "It's easy to have faith in yourself and have discipline when you're a winner, when you're number one. What you got to have is faith and discipline when you're not a winner." So if you've been getting chopped up a little bit here, still keep your confidence levels high. It's okay to sit on the sidelines and be patient, be disciplined. We have a methodology, we have indicators to tell us when the environment is strong, and currently they're not telling us the market is very strong. So in those situations, we need to sit on the sidelines and just wait. So some words of wisdom from Vince Lombardi. Again, a reminder, Rain King Insights. I have a few things I have to work out on the website. The guy that I'm working with some support on the website was on vacation this week, so I wasn't able to resolve a few issues. But if you're interested in the site, send me an email. Keep sending them in to support@rainkinginsights.com. I'm building a list, a distribution list that when we get ready to launch, I will send you a detailed email with a coupon and some other information to help you get acquainted with the site and the service. But I really encourage you to, when we come out live, which might be sometime in the next week, take a look at the site. Again, if you get a free membership, you have to sign up for that, but it doesn't cost you anything. You will get access to lots of free stuff. My Sun Shower series, the GMU Extras, there's over a dozen or 15 of these 10-minute videos that are really helpful to people. You'll see some of the other particular podcasts and webinar material from the courses. So you get all that for free if you sign up for $0. And you don't even have to be a member of the service to actually check out my research reports, and you can make a purchase of those without being a member of the site. Just get a free membership. So it's worth checking out. That's the general market update for June 28th, 2024. Look forward to seeing everybody next week, and I hope everybody has a wonderful 4th of July holiday.